Good morning. The reality of a more hawkish Fed finally hit the bond market last week, sparking a sell-off in bonds that sent yields higher. But before I get into my recap of the markets, a quick reminder that I am 1 week into a 3-week series on the topic of Medicare. If you are 60 or over and not yet on Medicare, these 3 different presentations are just for you. Last week, I did a 30-minute overview on Medicare basics. This week, on Wednesday, I'll talk about transitioning to Medicare and how health insurance works after you leave your job. And then next week, I'll take a deep look at what people need to know about Medicare and long-term care in a more comprehensive presentation titled Managing Healthcare Expenses in Retirement. All 3 presentations will be broadcast online, and you can get all the details at the events page on our website. If you missed last week, the recording is on the website now too, so you can view it at your convenience. Again, the web address is www.investwithccg/events. All right, that being said, I'm going to go ahead and play the intro, and then we'll look at what happened in the markets last week. Life is too short to worry about what the next headline could do to your life savings. Hi, my name is Eric Hagan, and I keep my thumb on the pulse of the economy and the markets so my clients can focus on the things that are actually important to them. Thank you for joining me the next few minutes on today's weekly economic video update. Higher bond yields and a legislative stalemate in Washington, D.C. added up to losses for the week. The Dow Jones Industrials average declined 1.36%, while the Standard & Poor's 500 lost 2.21%. The NASDAQ Composite Index fell 3.2% for the week, and the MSCI EAFE Index, which tracks developed overseas stock markets, shed 2.58%. It was an ugly week. The reality of a more hawkish Fed finally hit the bond market, sparking a sell-off in bonds that sent yields higher. Higher yields hurt technology and other high-growth companies, and that weakness spread to the broader market. If you're wondering, higher yields can reduce the value of a company's future cash flow, which may reset valuations. Congress added to the market uncertainty. It was unable to advance an infrastructure bill, and it made little progress on the debt ceiling agreement. After a sell-off to close out September, stocks surged on Friday on news of a potential COVID-19 oral therapeutic, an easing of yields, and reports that President Biden was traveling to Capitol Hill to help break the logjam on legislation. Federal Chair Jerome Powell was at the center of 2 news developments last week. The first was the announcement by a prominent senator opposing Powell's renomination, heightening market uncertainty over the leadership transition when his term expires in February of 2022. Powell later made comments at a European Central Bank event, admitting that the current bout of inflation may last longer than he and many other central bankers have previously expected. But he remained steadfast that inflation would be transitory, attributing much of today's price pressures to temporary supply bottlenecks. Powell also said that he saw little evidence of building inflationary expectations from consumers or businesses. As always, later today, I will be emailing out our full weekly economic update. If you're not getting this and would like it, you can go ahead over to our website and subscribe. In this update is also our financial tip of the week. This week has to do with retirement accounts. So if you have a retirement account, you want to pay close attention to this tip. But we also have companies reporting earnings, financial data that we're watching, plus a riddle for you as well. And while you're on the website, be sure to check out and RSVP for any upcoming events that may be of value to you as well. Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. Here at Capital Consulting Group, we provide personal wealth planning and fiduciary investment management solutions for individuals, couples, and families. To learn how to see your entire financial situation, both today as well as every year into the future, go to clearfinancialfuture.com and watch the short 2-minute video. To learn how we give our clients' life savings the attention it deserves and to see how we're doing, visit smartmixportfolios.com. And lastly, if you'd like help investing your 401k at work, visit me over at 401kinvestmentpros.com. Thank you again for your time today. I'll look for you next week.